Choosing a financial advisor is a really important decision. And luckily, I don't have a dog in the hunt here. I want you to pick the right financial advisor for your specific situation. We're a student loan coaching and consulting company, so we don't actually want to be your financial advisor. So I think this video is going to be really helpful because it's coming from hopefully an objective party where you can analyze the stuff that we're going to give you in this video so that you can decide who you should get financial advice from for your specific situation. So things in this video that I'm going to cover. I'm first going to talk about the types of financial advisors. I'm going to talk about questions to ask. And then I'm also going to talk about where to find a financial advisor. So let's talk about the types. First, we have a salesperson. Second, we have a robo-advisor or an online advisor. And then third, we have a fiduciary. So these three different kinds of advisors, let me explain what I mean by this. So first, a salesperson. So think about this. If you were buying a car from a dealership and you went to the salesperson at the Ford dealership, would you consider them an expert on car buying? You might consider them knowledgeable about Ford models and what their company can sell you, but you might not necessarily trust their advice if you're comparing a Ford to a Volvo, to a Mercedes, to a Tesla, etc. Right? And that's because they work for a specific company that's supposed to sell you a specific product, where if they don't sell that product, then that person doesn't get paid. So that is the kind of professional that a salesperson is in the financial advice industry. So a person who is a salesperson, you might say, operates under something called the suitability standard. So this is basically meaning that they can't sell you, a financial product that's totally inappropriate for your situation, but they also don't have any obligation to put your interests ahead of their own interests financially. So there are wonderful salespeople out there in the financial industry. However, they are very incentivized to deliver financial advice in a way that's generally more expensive than you could get other places. And it's advice that has to basically come from a particular company instead of the best solution available to you. So this is why we don't suggest working with people who are salespeople as financial advisors. Salespeople often call themselves financial advisors, but they're really not. They're really salespeople, and it doesn't mean that you can't ever get good advice working with a salesperson. But if you're buying a commissioned mutual fund, if you're buying a whole life insurance product, if you're buying an annuity, a variable annuity or something like that, a lot of these products are really designed to make money for the company versus you. So let's talk about the second kind of financial advisor, a robo-advisor. This is a pretty new kind of advisor, and we haven't seen big adoption yet for this kind of advisor because most of the people with the money are really wealthy and older, right? And so robo-advisors charge much lower fees, and so older people tend to, because they have maybe a lot of money at stake, but also maybe less interest in being very digitally fluent and doing all of their business on the internet, they haven't really fully adopted to that model yet. So there's new companies out there, a lot of big companies offering what you call robo-advice. It's not really, I hate the term robo-advice because it's not really advice coming from a robot. It's advice that's being delivered at scale in a way that lowers costs for everybody. So the fee for robo-advice is anywhere from free to around 0.5%, 0.5%. So a couple of examples would be Betterment, Wealthfront, Vanguard, Schwab. There's a whole bunch of players getting into the online advice space right now. So that's a robo-advisor. I think that's certainly a great option. Robo-advisors generally do operate on a fiduciary standard, which we're going to talk about in a little bit. The third kind of financial advisor is a fiduciary. A fiduciary is somebody that is a registered investment advisor firm, and they have a legal obligation to put your interests ahead of their own. Note, though, that they do not have a legal obligation not to charge you a significant amount of money. Just because they're registered investment advisors doesn't mean they're not allowed to charge you a very high fee in some cases to deliver financial advice to you. But what it does mean is at least there's going to be sort of an expectation that you're not going to get ripped off, that they're going to charge something that's at least reasonable in the industry. So you could expect to pay, if you hire a traditional fiduciary, you might pay up to 1% of your assets, or maybe even more than that, every year, which a lot of people think is too high. I think that for a lot of people that don't really care, they want a good financial advisor, then that 1% is something that's okay. It's not great, but it's okay. And if you want to negotiate a lower fee with somebody that will accept that you really like, you can of course try to do that. So 3 different kinds: salespeople, which are really not true financial advisors, and then robo-advisors, and then traditional fiduciary advisors. Now there is a 4th kind, and what I would call this is other professionals. So other professionals out there might be considered a student loan consultant like us, a CPA or a tax professional, an attorney. That's an example of somebody that gives you advice about things that impact your finances, but they're not technically a financial advisor. So think about a financial advisor as your quarterback that's coordinating all these different financial relationships and all these different investment accounts and all these different financial goals into one big plan that they're executing for you. So think about a financial advisor as a generalist and other kinds of professionals that impact your financial life as specialists. So now let's talk about some questions that you should ask before hiring a financial advisor. So 5 questions here to consider asking. First is, will you take advice? If you are somebody who's more naturally of a do-it-yourselfer, you might not want someone else's opinion. So that's important to consider before you waste money on paying somebody. Second, what are you looking for in an advisor? Is it someone who's available all the time? Is it somebody that you meet with once a year, a couple times a year? Make sure that your expectations line up with what the service that the advisor is providing. Third is, what are you willing to pay? Obviously, if you want a very high-touch, high-service relationship, you're going to have to pay more for that. And if you are not willing to pay anything north of 0.25% of your assets, then you will probably not be able to get a high-quality fiduciary human advisor for that fee. You'll have to use a robo-advisor option. So that's an important thing to consider about what you're willing to pay before you go out and try to hire an advisor and find out that you're not willing to pay any of the fees that they charge. Fourth, what qualifications do you want in an advisor? If you are a small business owner, it might be helpful to have somebody that has at least some tax background or knowledge. If you have very complex investment options available to you, you might want somebody who's a chartered financial analyst or CFA charter holder. And most people are familiar with the CFP designation, Certified Financial Planner. That's a good designation. That's a catch-all for anyone maybe with a 6-figure net worth or higher that they're really focused on just financial planning, bread and butter kind of issues. There are other credentials that you can get as well, but those are the 3 most important ones that I would look at when you're considering what qualifications an advisor has. If the advisor doesn't have any of those credentials, it doesn't mean that they're not qualified. It just means that you might want to have a lot more skepticism or a lot more caution before working with them to see if they actually have a high level of expertise in their field. 5th is the goals. What kind of goals are you pursuing? So goals, meaning what are your goals? If you are wanting to retire early, is that compatible with the kind of financial advice that your advisory firm gives? If you want to figure out a way to work part-time, if you want to become an entrepreneur and learn how to start a business and effectively structure your entities of the businesses you're starting, right? You want to make sure that the goals that you have are aligned with the kind of advice that the advisory firm is capable of giving. So now let's talk about where to get a financial advisor. So if you want to do things yourself and maybe get a one-time plan just to check in on your strategy, you might use a place like Vanguard, Fidelity, or Charles Schwab. I think Vanguard is a great place. It's where I put my own investments, and you can, I think, get a very cheap one-time plan from a CFP there if you want to just get a check-in to see how things are going. If you want more guidance but you don't want to pay the premium fee, then we would suggest checking out a place like Betterment, and you can work with them for as little as 0.25% of what you invest. So, if you have anything less than a couple $1 million to your name, that's a pretty cheap fee to work with a professional financial advisor. Finally, if you really want to work with somebody that's a high service firm that's going to be able to field your calls and you're going to actually feel like you're talking to a real human instead of just working through an online platform, then you might work with a traditional fiduciary financial planner. One of the groups that sponsors Student Loan Planner is Buckingham Wealth Management. So they're a good option if you're a dentist or a physician and you have complex practice or business needs that you're trying to plan for and coordinate with the CPA over how to minimize your tax burden. That's the kind of complexity that warrants hiring a full-time financial planner maybe at a higher fee where they can really provide a lot of the value that you're looking for. So those are 3 places about where you could find a good financial planner. Now I want to drive home a point. The right financial planner is somebody that you are comfortable with, that matches your values, that you feel like can help you get to your goals. At the end of the day, this is just for your information so you can make a better decision about who to work with. At the end of the day, it has to be your decision. So, and also I'll say, if you have student loans and that's your primary financial challenge that you're working through, a financial advisor is not going to be the person that's going to most likely get you the best advice. That's because the financial advisor is a generalist. Firms like Student Loan Planner are the specialists, where we know everything you can know about one specific area of the financial world, which is student loans. So if student loans are your primary financial obstacle, reach out to studentloanplanner.com and get a student loan plan to address the first thing that you need to address before you start working on everything else. And also watch our next video about why getting a student loan plan is so important.